Welcome to the Safe Money and Retirement Show with Jon Heischman, founder and partner of Heischman Financial Services, serving the Columbus area. Jon is an independent financial advisor. That means he's unbiased and he works in your best interest. Jon specializes in safe money retirement planning, working together with you to achieve your ideal retirement. And now it's the Safe Money and Retirement Show. Here's Jon Heischman.
This is Jon Heischman. I'm your host. I'm bringing you the Safe Money and Retirement podcast. Thank you for tuning in. There are a lot of past podcasts on my website where you can listen to them at any time at your convenience. Go to HeischmanFS.com. I'll spell that for you. HeischMan, then the initials FS.com. Safe money concepts, money management, investments, all focused on retirement planning. Questions or concerns or additional information about your interest, I can be contacted through the website or by calling 888-426-0177. That number again, 888-426-0177. And speaking of retirement planning, taxes in retirement are so important and need to be addressed in your retirement plan. They also need to be reviewed periodically because situations do change. Taxes in retirement, a lot of it is some simple ideas and changes to your plan that I can work with you on. However, when we get more detailed or there are a lot of assets that need to be addressed as far as taxes, we need to bring in the accountant or CPA that is versed in tax planning. I don't do tax planning, but as mentioned, because it's such a big part of retirement, I need to know the basics and then some. Paying taxes is an act that people have hated since the beginning of mankind. All through history, you can find story after story, tale after tale of people fighting the tax collectors. In fact, there is a country that you might be aware of that was founded with the slogan, "No more taxation without representation." I think most of us have heard that, especially those that are getting ready to retire or are in retirement. And we also realize that these days, most of us have taxation without representation. There is very little that we can say or do that will affect what tax laws are in place or how the tax laws are created. But what you can do and need to do is understand how tax laws work, understand how tax planning works, and be aware of the options that you may have and can use legitimately, legally, and safely to reduce your taxes. There might be one idea that can make a big difference, especially for those who have the majority of their retirement assets in qualified money. Qualified money is IRAs, 401ks, pensions, 403bs, any retirement plan where you've had tax advantage during the contribution years that you were making contributions. I have clients who have $500,000 or more in qualified money that is all going to be taxed when they take distributions. All those years that we benefited from the tax write-offs, deductions from IRA contributions, 401k contributions, reduced the taxes that we had to pay. Now, in retirement, as we all know, somewhere we're going to have to pay the price for having tax-advantaged plans, whether it's before the required minimum distribution age or at the required minimum distribution age. A lot depends on your planning and how the plan is set up. We have to look at, are you going to need income from those qualified money accounts? If you do, you're going to pay tax on that. Or can it be delayed until the required minimum distribution age? But in any event, we're going to have to pay taxes, or somebody is going to have to pay tax on that money. So, from a tax planning standpoint, doesn't it make sense to address your qualified money? When are you going to take the income from that? Do you need the income from that? And if you don't, you'll be delaying that until the required minimum distribution age. Now, to do that, I feel the plan has to take into consideration all other potential sources of income, and then work with the plan to make it tax advantaged. I hope most of you have done that, so you're not in a situation where there's going to be a surprise later on in retirement. Now, if you're just not sure, or maybe you want a second opinion, give me a call. I welcome the opportunity to talk to you about that, give you my ideas from many, many years in practice doing retirement planning. The number is 888-426-0177. 888-426-0177. I want you to keep in mind that taxpayers are not required to pay any more tax than the lowest amount that the tax law demands. This theory and way of thinking must become a way of life. As I plan for your retirement, we must plan out your taxes and reduce them as much as possible. As I mentioned previously, whether you're getting ready to retire or even if you're retired, I haven't seen any retiree or potential retiree want to pay more in taxes than they have to. I see many people that are overpaying in taxes, so it must come from not understanding the tax laws or getting advice on tax planning. It's tough to know the tax laws. Seems like every year there's changes, and you want to make sure that your tax planning portion of retirement is reviewed periodically during the annual review of your plan. So what does tax planning involve? And I think you can break that down into 3 categories. One is discovering the different strategies you can use to make wise choices, educated decisions concerning the tax strategies that you want to implement. 2, understanding them fully. And 3, integrating your tax situation with your entire retirement plan. Now, the interesting thing about retirement planning in general, everything you do in one area of your plan could, and most of the time will, affect all other areas, good or bad. This is so evident in the tax area. There is nothing you can do, financially speaking, that does not have an effect on your taxes. I want you to think about this. If you keep your money in the bank, that's going to affect your taxes. If you take your money out of the bank and put it somewhere else, that's going to affect your taxes. If you sell stocks, that affects your taxes. And if you buy a house, yes, that is going to affect your taxes. If you sell a house, same thing. Also, if you set up a trust and wills for your estate, that affects your taxes in a good way. What if you make gifts? Yes, it's going to affect your taxes and your employment, whether it's part-time or full-time, that has an effect. And if you own any kind of business, I think you know the answer, it's going to affect your taxes. So every activity, financially speaking, will be reflected somewhere on those tax forms. Since tax planning and investment planning are so intertwined, they must be done together in concert. So every decision you make will be integrated and coordinated with the other areas of your retirement plan. So what do I look for? One would be tax-deferred accounts and, of course, taxable accounts. How can these two work together? What is the tax situation on each one of these accounts? Tax-deferred accounts could be qualified or non-qualified money. A good example would be a non-qualified tax-deferred annuity. The gain, interest earned, is taxable, not the principal. And of course, the IRS says when you take a distribution, the tax portion has to come out first. Whereas your qualified money, it's all taxable, principal and interest. So when I'm putting together an income plan, both qualified and non-qualified money has to be taken into consideration as to when do we take income from those accounts? What's delayed? Or can you delay any of the sources that you have? And in retirement, when a client takes income, you always look back and say, I wish all of my retirement assets were in non-qualified accounts. But that simply is not the case because the majority of retirement accounts are in qualified money. 401k plans, 403b, IRAs, and in many situations, a combination of each. And I've worked with cases where very little or no money outside of an emergency fund in a bank is in non-qualified accounts. But when there's both, it really makes it fun and challenging because, as I said earlier, I have to work with the client and figure out what account or accounts do we draw from at the beginning of retirement and or during retirement. So there is an art to tax planning in retirement, and so many plans I will take to the CPA to check my advice and get a second opinion when it comes to taxes. We can't get rid of taxes altogether, but we can help to get rid of some taxes. And I think this is a key point, and hope that you'll spend time thinking about this and addressing it in the future. I said previously, if there is one and only one thing that you discover, it could help reduce your taxes in retirement. In summary, tax planning involves discovering the different strategies that you can use that's available to you concerning anything you need to take advantage of and implement as part of your plan. Be sure to understand them and integrate your taxes with your retirement plan. I really appreciate you taking the time to listen to Safe Money and Retirement. Again, go to HeischmanFS.com or give me a call, 888-426-0177. Once again, 888-426-0177.
Thanks for listening to the Safe Money and Retirement Show with Jon Heischman. To get your retirement planning on the safe track, reach out to Jon at Heischman Financial Services. Call 1-888-426-0177. That's 1-888-426-0177. Or visit their website at HeischmanFS.com. Listen in again next week at the same time for the Safe Money and Retirement Show with Jon Heischman.